Bubbles. An economic bubble occurs any time that the price of a good rises far above an item's true value. Bubbles are typically due to a change in investor behavior. It can develop in economies, securities, stock markets, housing markets, and other sectors. Bubbles cause investors to eagerly pursue profits without hope of a return. Bubbles continue to grow until people realize that prices have risen far above what they should be. At that point, bubbles pop and fall to a more realistic level. Bubbles are not anything new. There was the tulip bubble in the 16th century in Holland where tulips could be used to purchase a house. In the 17th century there was the Mississippi bubble in France. Earlier in the last century there was the bull market of the Roaring Twenties which ended with the Great Depression. The Japanese bubble economy occurred between 1984 and 89. At its height, in 1989, real estate in Tokyo sold for more than 350 times as much as prime property in Manhattan. In the 1990 and early 2000s we had the dot-com bubble where people chased stocks because of new technology. Investors bought tech stocks at increasing prices, believing that it would continue to climb. Eventually investors lost confidence and sold, leading to the eventual bursting of the bubble. Recently we had the Bitcoin bubble of 2020 to 2022. Bubbles have a pattern. The smart money invests early in the cycle before prices start to increase. At this point, institutions enter the market. At the end of this awareness phase, there is often a bit of a sell-off where some investors take profit. Once the media gets a hold of the market, the general public start to enter the market and valuations increase. This phase goes into a period of enthusiasm, followed by a period of greed and delusion. At this later states of the cycle, it is believed that anyone can make money. The cycle ends with a new paradigm which could be triggered by anything. It could be war, it could be a new investment, or it could be an event like increased interest rates. The market starts to fall, but there are people who deny that the party is ending. Some investors will deny the reality of the party ending and buy again, thinking that there will be a return to what they believe was the norm. After a period of prices continuing to fall, beliefs change and people realize that things will not return to what was before and people start to fear and the market goes into a period of capitulation and prices drastically drop. Only when people past a period of despair does the market bottom and return to a mean price. Where's real estate headed towards? For clients and potential clients, I've been advising to take advantage of the higher prices.